Hi guys, I'm back with another episode of our video series and I'll be speaking with Aly Madhavji today. He's the managing partner of Blockchain Founders Fund, an advisor to the United Nations on Emerging Technology, and an advisor of Polymath. We will be mainly talking about STOs or security token offerings and how it is different from ICOs. So stick around while you join the Sun call. Hi Ali, thank you for joining me today. And we will be talking about security tokens. So we will start with talking about what a security token is.
Absolutely. So a security token, so maybe as a point of background, I am an advisor on Polymath, which is, one of the main security token players globally. And a security token is essentially a tokenized form of asset debt, or what we call company securitization. And as an example of that, company securitization could be things like equity, common shares, preferred shares, profit, dividends from retained earnings, things like that. An asset could be, property, plant, and equipment for a company, or short-term futures, or prepaid expenses, things like that. You could also have your building or real estate, and debt instruments could be things like corporate debt, government bonds, debentures. So essentially any sort of asset debt or company ownership structure that you can tokenize and basically have that token represent that value of the underlying asset.
So how is an STO different from an ICO?
Absolutely. So they're very different, right? So in ICO, generally there was no underlying asset. A lot of it was based on essentially this new asset that was created, but it didn't necessarily align interests of the company and its underlying assets with this underlying asset, which was the ICO. And so what you had was, for example, the company board might want to do something that benefits them, but the ICO may not actually benefit the board. And so there could be like a differentiation in approach to the market, right? Or an interest. So interests weren't aligned. And so the big thing with security tokens is, how do you align that? And so if the token itself represents the equity of the company, you are aligned with the equity holders of the company, right? Similarly, if let's say you tokenize a building and you sell part of that building in terms of fractional ownership of that building as part of a token to an investor, that investor owns part of that building. That token would represent part of that building. And so your interests are much more aligned using a security token infrastructure, assuming that you know what you're buying as that underlying asset or debt instrument.
Right. So is this basically what people mean when they say security tokens help liquidity of private assets, right?
Yeah, so it depends, right? And so it does from certain ways. The way I look at it is security tokens just represent that underlying interest, right? And so it depends on what the security is. If you take private assets, you could take, real estate, like more liquid assets, like real estate or art, for example. You could actually create additional liquidity by having fractionalized ownership. So let's call it, a painting that's $20 million. There's obviously a very small market of buyers for that. But let's say it's a very famous painting, right? So it's like the Mona Lisa, and it was actually up for sale. Probably an unrealistic scenario, but let's say it's up for sale. And there's a lot of people that are very passionate about that particular painting, and you could have $25,000 tokens to represent that bigger amount that you're trying to represent. And so you could actually have a lot of small investors come in, and now they own part of this painting, right? And maybe all of the revenues that come from visitors visiting that museum or that painting or something along those lines. And so you could actually make this a much more attractive asset because of its price point, because now people can invest at $25,000, and that makes it more liquid in reality, because instead of having 20 potential investors or 30 potential or 1,000 potential investors, now maybe you have 10,000 potential investors or 100,000 potential investors. And so the lower price point and having that fractional ownership does make it ideally more attractive and increases the pool of potential buyers, which, can make it more liquid. I think also, though, at times, people don't realize that sometimes these assets may not be that liquid. And so I think it really depends on the asset and making sure that there is an increased group of buyers that would be interested if the price point was substantially lower.
So what would you say is the state of liquidity of security tokens today, and how do you think it will change, say, this year?
Yeah, so I mean, that's a good question. So it is very early days still in security tokens, right? So there are several exchanges, but they're still not, very popular, I would say. They're not mainstream. You don't have your typical accredited investor going on and looking at these security token exchanges. They're not registered yet. On average, they're not, right? So we do think it's going to change. We think that this is more of a long-term play. So 1 year is still a short time horizon. I do think 2019 is a big year, and 2020 are big years for security tokens. And we're looking at, very large growth. But in reality, we need to be looking at security tokens over, a 5-year horizon or a 10-year horizon, which is where, we hope that this continues to go mainstream. I mean, we look at a decline, for example, in companies willing to go public, right? And this is very clear across stock exchanges all around the world. You hear stock exchanges talking about this. You hear regulators talking about this. You hear, people across the finance industry talking about this. Maybe there's an opportunity for security tokens to fill this gap, right? Like it can maybe potentially help, fill a gap underneath public markets as a smaller maybe token or like ticket size raise, maybe like a few $1 million. Companies are looking to raise a few $1 million. The ability for security tokens to bring in benefits like bringing down the cost of fundraising, ideally by streamlining it, things like reporting, administration, legal processes. By streamlining this, it can bring down the cost to fundraise. And so that could be an exciting opportunity for companies that are looking to fundraise. It can help with consumers, as I mentioned, with fractional ownership and having economies of scale that way. We can look at externalities. So the ability on blockchain to be able to trace who's purchasing these tokens in a more effective way. Regulators could use this to increase transparency and traceability, and maybe that'll combat issues like insider trading. So there are a lot of benefits, but we got to look at, the longer term evolution of what this really means in terms of digitizing assets, liabilities, company ownership structures, and what that'll kind of look like over that time frame.
Right. You were saying something about exchanges. So is the trading in security tokens the same as trading in utility tokens?
No, so it is going to be quite different, and it is quite different, right? So you're seeing on security token exchanges the need to be an accredited investor in certain jurisdictions. It will vary though. So security tokens typically you do need to have be an accredited investor. And so what that means is different across jurisdictions. Typically, it ranges somewhere from around, and it depends on the country, but something along the lines of $200,000 in net income or $1 million in net asset value or net worth. And so, and again, this varies across different jurisdictions. And so you do need to look up what it is for your jurisdiction. And then secondary trading also has its nuances, right? So this could mean that you also need to be an accredited investor to do secondary trading, perhaps after a 1-year lockup, which we've seen in other jurisdictions. Potentially you're able to trade security tokens then being a non-accredited investor, but it really depends on the jurisdiction. So it's not as simple in quotations as ICOs were, utility tokens were. And so there is a lot more complexities because it needs to align with the jurisdictional requirements in the area that you live.
Right. So overall, you are saying that STOs are under more scrutiny than ICOs.
I mean, they definitely would be, right? Because the idea of a security token is to align with existing legislation. And then over time, maybe that legislation will change. But the idea is to align with existing legislation. And so if you're the company launching an STO, you would need to follow regulation or legislation in the country that you're in and the countries that you're selling or raising capital in, right? And then if you're on the other side and you are you want to trade security tokens, you need to be following the legislation in the country that you're in. Potentially the exchange needs to have a license in that country. So it really depends on where you are, but there's likely a number of regulatory components as part of this process.
So which industries would you say would be more keen to explore security tokens?
Yeah, there's a number of different ones. I think one thing that's very interesting is security tokens don't need to be companies actually building blockchain. So like you could have, a very hot company that like is very consumer, maybe focused, that finds interest in, hey, let's do a security token to sell our equity, right? And that could be interesting. So the only blockchain component is really the tokenization of their equity, but their business might not actually be doing blockchain as part of how they operate. And so there are different aspects to this, because this literally opens up blockchain to any industry. I think the industries that will do best as security tokens, personally, there's a number. I think the debt markets are very interesting. Debt markets are massive in comparison to equity markets, and the ability to token debt could create liquidity to a somewhat illiquid market in certain ways, or more over-the-counter type of market. And so I think the debt market's one that's not being focused on enough. I think consumer brands also, or things that are brands but they're very popular, I think will also be interesting to look at tokenization. So like imagine Ferrari or Lamborghini, like they got very strong consumer brands. They're things that people want to reach for, and they kind of aspire to. Like those could be very interesting STOs. I think real estate could be interesting. I've heard a few interesting ideas, but a lot of the times I find real estate doesn't really solve too much in addition to traditional REITs, so real estate investment trusts, which are already listed on stock exchanges. A lot of those are already fairly efficient. So I think the real estate market, it really depends what you're doing and how you're differentiating and being substantially more efficient or creating more value than traditional REITs. I think markets like art or like highly liquid assets, I think it really depends on what type or what is that underlying asset that you're looking at tokenizing. But if there is a consumer focus or a big market of enthusiasts, then I think that there could be a really interesting component to tokenize. Also, when we look at things like property, plant, and equipment, or like sale leasebacks, tokenized ways of doing that could be interesting, because this is something that's a little bit less liquid, and this could help to streamline it.
Right. Speaking of token activity, so I suppose there are different stages to it. So can you just explain that a little bit?
Yeah, so I mean, there are definitely different stages to token activity. And if I'm not mistaken, are you referring to the ability to, like, say, create the token and then sell the like to fundraise off the token, and then the consumer angle, or kind of maybe you can clarify that?
Yeah, basically I wish to know about the offering stage and the trading stage. Like how does it go from here to there?
Yeah, so a lot of companies are still figuring this out, because it is early days of security tokens. But I mean, the idea would be, and what you're seeing companies do is, I mean, they'll first look at legislation in their country and where they want to fundraise, right? And so they might pick a few jurisdictions, like fundraising in the US, fundraising in the UK, or whatever those countries that they choose are the best for their market. And they'll ensure that they follow legislation for those markets. Security tokens, as they continue to scale, will get better at streamlining the legal aspects of these different jurisdictions. And then what they would do is they would go fundraise. It's pretty similar to an equity fundraise at the start. I mean, you might look for bigger anchor investors or lead investors into your STO. And then there are different fundraising platforms as well that have accredited investors that have signed up, that you can also put the STO on to basically fundraise, across those investors, and you let them know, what is in that offering. Is it equity? Is it debt? Is it an asset that you're securitizing and tokenizing? And then, once, you go through that process of fundraising and you hit your target, hopefully, then you can look at listing on an exchange. And again, depending on the jurisdiction, I mean, initial investors may need to have a holding period and hold it for a year or a different time frame, and then potentially trading can start after that point. So it really depends on what market you're in, though.
Right. So coming to efficiency and cost effectiveness, as well as timelessness, actually. So how does a security token bring a person to all of that in their business?
Yeah, so I mean, if you're talking about it from the standpoint of the company issuing the security token, or like that like the company that's fundraising, I mean, this can vary quite a bit. It is still early stages, as we mentioned, right? And so there is a little bit of a premium to figure this out, right? Because I mean, you've got to understand the legislation in that country and in those countries that you're planning to fundraise, as well as look at, the tokenizing aspects. And so I mean, it can actually potentially cost more right now than doing a traditional equity raise, but there are some benefits, right? So we talked about the fractional ownership. We talked about, potentially the liquidity benefit that you could have off of this. I mean, in reality, there's also potentially a signaling effect that leads to higher valuations of a security token than a traditional company, because you're signaling that you're an innovative company. You're doing this, this new way, and maybe that translates into a higher valuation right now. So I do, and I think that there's also a benefit of potentially branding and other things. And so there is potentially a higher cost, but this is going to streamline, right? So that's the interesting part about security tokens. It's how do you take those legislative requirements and build them into the token, right? So I mean, Polymath, for example, has ST20 and ERC 1400, which we're looking at. How do we continue to streamline this process and build in like things like KYC into the process, and build in so know your client and anti-money laundering legislation, right? Like how do you build that for each jurisdiction into the token? How do you build in all of these different legislative requirements for fundraising per country, right? And so as that continues to get built in, then in the future it'll be, I want to fundraise in the UK and the US, and that, someone's done it before, it's been pre-programmed in. It's much more streamlined. It's much more cost effective then. And this is where there's all of these scaling benefits to security tokens.
Taking from your previous response, I would like to know how tokenization in general helps with investor identity.
Yeah, so in terms of investor identity, I mean, in reality, a lot of the companies are going to follow the traditional way of KYC or AML. And there's a number of companies that offer this, right? Over the longer run, what we're seeing is the benefits of blockchain to KYC and AML, right? And so we're talking about immutable records, so that you can essentially put these identities onto the blockchain. You can essentially have digital identities that can't be counterfeit or fraud, and that you can prove it based on, the devices that you're on, or other aspects. And so there is these types of benefits that come from blockchain with KYC and AML. But what we're seeing is likely traditional KYC and AML players that'll come into supporting security token infrastructure kind of take off, while a lot of these blockchain solutions are continuing to launch. And these companies are starting to put those identities onto the blockchain so that they're immutable.
Right. So recently I read a little about security token 2.0, right? So basically, how many sorts of security tokens are there, and how are they different? Is there a 3.0? Is there a 1.0? I mean, I don't know.
So I mean, I think a lot of people roll out these terms. I mean, I hear similar things like blockchain 4.0. To be honest, I've heard 5.0 and 6.0 actually recently. To be honest, I think it's all very early stages. I mean, blockchain has gone through a couple of big, evolutionary and revolutionary steps, and it's starting to make very big progress. Obviously, with Ethereum coming out, and you've got smart contracts and other benefits coming from Ethereum, like there is definitely, you can definitely see kind of that evolution. With security tokens, it's even earlier, right, than where blockchain has gone over the last decade. And so I don't think that we're really necessarily at 2.0. I think we're still figuring out these initial stages. We got a lot of companies that are doing security tokens. We've got exchanges that are launching, but it's still early days. I mean, we don't have if you go to the average person, there is no exchange that they're even thinking about in terms of security tokens. They might not even heard the term security token, or they're hearing about it now, right? And so, exchanges are still launching. Liquidity is still very early stages. There is no like major source of liquidity on security tokens, and this will be an effort from each security token and streamlining and how they share that information. We're still got processes in different countries that we're figuring out, and how do you actually put that into tokenization to streamline it and scale it. So I mean, to be honest, I think we're still in early days of security tokens, but it is very exciting. I think there's immense potential to change the landscapes in these countries, and you can almost look at it as the digitization of traditional securities, and I think that's pretty exciting to see that kind of move into this 2.0 world.
Blockchain scene like in Mauritius?
I mean, it's growing, but it's slow. We're trying to make a pretty big dent in making Mauritius the hub for Africa. So we'll kind of see how that goes.
Hub for Africa? Isn't Nigeria already that or something?
So Nigeria's been doing a lot. I mean, Kenya's been doing a lot, but we think Mauritius has a really interesting opportunity to kind of build this as an innovation hub, and so we're trying to explore this with the government and with some of the institutions here.
Right. So thank you, Aly, for joining me and answering all my questions and being so patient.
Thank you so much for having me on, and feel free to reach out to me anytime.
So that's the end of our conversation today. Join me again next time as I speak with another blockchain expert. And meanwhile, don't forget to check out our website, hashcashconsultants.com, to see what we are doing with blockchain. Bye for now.